Hi, this is Enrique. Welcome back to my channel. I'm here with Blake today.
Hey everyone, this is my dog Marley. Thought we'd say hello to everybody.
So today we'd like to talk a little bit about diversification of assets. It got me thinking today as I woke up and looked at the overall condition of the stock market, the cryptocurrency market. Bitcoin is at an all-time high, 107,000 it hit today. Other cryptos as well continue to be at all-time highs. Ethereum hit 4,000. And then you got a lot of individual stocks, namely some of the ones are like Palantir, Tesla, Apple, Facebook, other individual stocks, Nvidia, just going to the moon. And so that got me thinking, for people out there who are currently invested in these types of investments, it would be a very wise idea to take some of the profits off the table. I know some people would criticize you if you sell these stocks and they continue to run up, but it is very important to be able to take some of your profits and pay some of your debts down right now. If you do have a car note maybe with a high interest rate, or maybe a mortgage, if you have a mortgage you've bought down recently at 7% or 8%, or even if you have a high interest credit card debt that's basically locking you down to be able to have a little bit more financial freedom, I think it's in everybody's good interest to take some profits and try to pay some of that debt down, so that if these stock market or if this crypto market decides to temporarily crash or even take a high downturn and enter into a bear market, that at least you don't have the creditors after you. And so Blake here, he'll give you a little bit more examples as to what type of assets maybe you should be diversifying into.
Yeah, absolutely. We were talking about that this morning, the absolute euphoria that is happening right now. And there's no real way to tell how this is going to play out over the next month or next 3 to 6 months and beyond. So we were looking at some of the stocks that Enrique had mentioned here this morning, and they are just absolutely out of control. The valuations are through the roof. If you look at all the Buffett indicators, or just lots of metrics that people use to determine what value these stocks actually have, it's off the charts. So in our estimation, if you are and have been in these stocks for quite some time, or even just more recently, but most folks would probably fall into the long-term category with a lot of these markets, there's nothing wrong with cutting a little bit of profits and taking that off the table, especially if you have debts, like Henry said. So if you're in a situation where you think it would be prudent to even just start trimming those positions, you can definitely still hang on to even the majority of those positions if you'd like. If you think it's going to keep running up higher, excellent. You still have some on the table to play with. But also, if things were to take a sharp nosedive, which a lot of people in the financial atmosphere, experts are saying we are looking at a potential crash or collapse in the near future, you don't want to be sitting there saying, oh no, I should have taken some profits or at least a little bit off the table. Because if you do that and you get a good entry point, say things go down 20 or even 50%, and then the money printers get fired up, Jerome Powell rallies the money printers, and you think it's going to go skyrocketing back up, absolutely. Then you have a little bit more to play with.
All right, yeah, you made some very good, interesting points here. Also, there was a story that I haven't shared with you guys, but about 2 or 3 years ago, maybe, I think it was 2021, I was at the DMV renewing my license plates for one of my vehicles. And I ran into the clerk that was helping me do that. And we started talking about cryptocurrency. Mind you, this was when Bitcoin was somewhere around the $50,000 range. And we started talking about cryptocurrency. And this is just a regular DMV clerk behind the counter. He had mentioned that he actually had held on to 6 Bitcoin since back when Bitcoin was somewhere around maybe $100, $200. And he actually held on to it because he used to do a lot of online gambling. And so back in the early days of Bitcoin, that is how they were paying the people that did gambling online, is through Bitcoin. And he had held on to it all these years. And at that point, he had a massive amount of wealth sitting in his fingertips just with 6 Bitcoin, right? But I asked him, I said, what do you plan to do with this? He said he was going to hold on to it. I have no idea if he's still holding on to these 6 Bitcoin. But if he is, he's currently sitting on over $600,000 of Bitcoin. If I was in his position, I would definitely at least grab some of that Bitcoin, sell it off, and maybe pay off any debt. Maybe he has a mortgage. Maybe he has credit card debt. Maybe he has a car note. If that's the case, I would definitely look at trying to pay off all that debt so at least he is not incarcerated by debt. And a lot of Americans right now, they do have that issue where a lot of the money that they have, they just use it to pay the monthly bills, and then anything extra, they go into heavy credit card debt to be able to finance their lifestyle, right? If you are in that position where maybe you've put in some money into some investments, you do want to try to at least diversify some of those assets. I've run into a lot of people over the years where maybe their favorite asset class would be real estate. And if you are too heavy into real estate, it would be very wise for you to try to diversify some of that as well. I don't think it's a good idea to be all in Airbnbs, or maybe if you do have real estate assets, maybe you want to make sure you have them in different parts of the United States as well. Right now, the United States is in a very precarious situation, and if something does happen, like a natural disaster in one area, it would be good for you to have a property in a different area that's not affected by that natural disaster. It would be a good idea if you are heavily invested in one individual stock, which a lot of people are. Maybe they're a big fan of tech stocks, or maybe they're a big fan of commodities. Maybe it would be a good idea for you to diversify, maybe get into some index funds, or maybe even have some cash so that if you do have somewhat of a bear market, you'll be able to buy in on some of those sales. And so another thing too is what I have noticed with people too is they fail to take profits when the getting is good. So right now, we're in a situation, I know for a fact that we are overvalued when I start hearing ordinary people that usually would not invest in the stock market asking me questions about how to get into crypto. When I start hearing people asking me that, people that I know that have never been in investments, and they start asking me, can you help me? How do I get into the crypto market? Or how do I get into the stock market so that I can buy some Tesla stock? And when I start hearing that, that's when I know that these markets are overvalued. That's when I know that I have to start taking some profits off the table. And yes, markets could run up, but if you do take your profits and if you do diversify, and if those markets tank, at least you know that you'll be somewhat protected. Now, Blake, do you have any other suggestions for people on diversifying as well?
Yeah, you made a really good point with the story about the gentleman at the DMV with the Bitcoin. So just in my experience, personal experience, I've been in a situation in the past during the first speculative boom right after COVID where I got into some speculative stocks, and at the time I was very much a beginner, and those stocks ran up incredibly. And I was euphoric, and I was listening to the hype, and I thought this is going to keep going up. And so I didn't sell anything. And then sure enough, it tanked. And what I should have done, looking back on it, is taken some money off of the table, even a large chunk of that, to the point where if I had been able to take off my initial investment and then let the rest ride, I could have played for free, so to speak. So I think that's a really good idea. I was just listening to a financial expert on a different podcast, and he was talking about the cryptocurrency XRP. And he was saying how he had some investor friends who had bought in early with a large sum of money. And he told them, as XRP ran well over 200%, he told them, I would take your initial investment off the table and then you play for free. Because if that market were to tank and those people had not sold anything, they could be in a situation where they lost all of their gains and went back to neutral or even below that. So by selling that portion, let's say it does go to the moon, there's not going to be much regret. You might say, I could have made more, but ultimately, if you take that half or whatever portion you left that you were playing for free and it does go to the moon, ultimately you're going to be happy with your gains and you're not going to worry too much about it. But from personal experience, I can tell you it's much more painful to have held on, not sold anything, and if it does tank, which is a quite strong possibility, it's going to tear you up more. So if you're in a situation where you've seen your accounts grow, I mean, the average returns for the stock market are what, Henry? like 10, 12% a year on average, something around that.
As of right now.
Lately, we've been getting clips of 25, 30%. Some stocks individually like NVIDIA, Tesla, Palantir, going up 300-400%. So yes, that can keep going, but ultimately we might see a downturn. If you have been fortunate enough to be in those positions and you've seen hundreds of percent of gains, it's likely a good decision to take some of that off the table, be happy with those gains, and then let the rest ride.
You do have to be very confident in decisions you make as well. My own experience dealing with a lot of people who do taxes where they end up selling a lot of capital gains, I've seen over the years people sell a lot of Apple stock, people sell a lot of different cryptocurrencies, they make very good gains. But if you're confident in the decision you make, then you should not have to worry. If you don't touch your investments and you don't use it to be able to make your life better, then at the end of the day, you're never going to be able to see all of the effort that you've put in to be able to make these investments grow. And so a lot of people are tied in debt. They are tied in debt. And this Christmas, there's going to be a lot of people out there who see their accounts at all-time highs. And so they're going to be euphoric. They're going to go spend more than what they need. Maybe they won't sell their stock. Maybe they won't sell their cryptocurrency. They'll just use credit cards, or they'll use cash that maybe is needed to be able to pay their monthly bills, to be able to finance a trip during the holidays, or purchase a watch, or maybe some sort of toy, maybe that they don't need, just because the market's at an all-time high. But once everything turns, which anything could break this bubble, they're never going to be able to see that money put to use. All they're going to see is losses in red. That's all they're going to see. It's very important to diversify. Make sure you have some cash. Make sure it's not all in one asset. Make sure you have some dry powder so that if in the future there are some opportunities out there for you, you can take advantage of them.
Yeah, I think precious metals is another topic that we are quite fond of on this channel. So having a nice stack of gold and silver, for me personally, I look at that as my insurance policy. If all hell breaks loose, things collapse in a manner of different ways, which we are looking at very tumultuous times right now in many different aspects in the global economy, that's a nice insurance policy that I have that I know will always be there for me, or if I have children, I can pass that down to them. I don't look at that as really even liquidity, even though you could do that. I look at that as, I hope I never need this, but if I do, I have it. And right now, we were just looking at the gold and silver prices, and gold has had a really nice run here over the past 6 to 12 months. And the gold-silver ratio right now is about 1 ounce of gold to buy 85 ounces of silver. So classically, that is a very, very high ratio. So if you look at mining for gold and silver, it comes out of the ground at about a ratio of 1 ounce of gold to 15 ounces of silver. You might find different amounts depending on the source, but classically 85 to 1 right now and 15 to 1, that's a pretty wide spread. So in my estimation, silver is on sale right now, but gold is never a bad option too. So if you are an investor that has quite a bit of liquidity, you can get higher amounts of gold, but if you have lower amounts of liquidity, I would start with silver and then add smaller, even like 1/4 ounce gold coins are a good option, and work your way up to full ounces if that's something you can look at. Then that way you have an insurance policy. Also, we talked a little bit about farmland, housing. That way you're diversified. You know, people that are just all in on the markets. You know, I have family, friends, etc., that will, likely have millions of dollars just in the stock market. That looks fantastic when you're looking at the computer screen and your statements. Man, I'm rich. But what happens if the stock market crashes 60, 80%? What if something terrible happens? Black swan, world war, grid goes down, catastrophe strikes, whatever it may be. The money printers turn off, the dollar collapses. There's a million things that could happen right now. We're in very tumultuous times. So I just think that that's not the smartest option in current times. So having a little bit of stocks, having some cryptos, having some gold and silver, having some real estate, it's a good way to protect yourself. If one or more markets were to shift or go downward, you're going to be better protected.
And not only that, like I said in the past, if you are currently an employee, if you are not self-employed, I highly recommend that you try to find what you're good at, what you're good in your abilities, and you try to start something on the side. Always good to invest in yourself, because that is money that can be made extra that can be applied towards some of these investments. You can put some of that money into metals, you can put it into real estate, you could put it into cash to have some dry powder to play with. There's a lot of things that you can do. And if you are well off as an employee, that's just going to be extra money rolling every single month. That's one of the reasons why they say that the majority of self-employed individuals, those are the ones that usually are able to control a lot of today's markets. If you look at today's society, those are the people that tend to have a lot more assets overall. Usually when you're an employee, it's harder for you to be able to scale when it comes to having assets. You will have a harder time. I appreciate everybody continuing to enjoy our content. We'll continue to provide good content here that we think will make you a better person. Is there anything else you want to add in closing, Blake?
Yeah, we touched a lot on the diversification of assets, and the last thing I would mention is your health. It's one of your biggest assets that you have, so invest in yourself too. That's an important factor in all of this.
Yeah.
You can have all the money in the world, all the stocks in the world, all the crypto in the world, all the gold in the world, but if you don't keep yourself healthy, strong, and vital, that means nothing. So invest in healthy food, fitness, working out, having good mental health. So I think that's a very important asset to have as well, and definitely something worth mentioning. So in closing, I appreciate everybody. I appreciate being on Enrique's channel. It's been a lot of fun talking to everybody here, and looking forward to a lot more in the future.
All right. You guys take care. We'll see you soon. Take care.